Good morning, everybody. Welcome to Stockradar, Stocks on the Move for another week. Today's date is the 12th of February 2026. My name is Richard Lee and I made a stockradar.com.au website for you. Well, as some trends end, others start in the endless rotation of stock trends. Seldom are there no opportunities, and if there aren't, you probably shouldn't be in the market anyway. The market is always sending us messages which we ignore at our own peril. Watch, observe and act, but don't data mine until you find what you want. Danger. The key is to always be mind neutral, listen to the price action and to go with the flow. We try and don't make things harder than they should be in this world. Okay, so trend waves come and go. Our aim is to catch them as they break, ride the momentum until they flip out, and that's what we've been doing the last couple of years, which has been an extraordinary time for us all. But we're all doing pretty well in this market, I think. So that's just this. Thank our lucky stars that things are going okay at the moment. Okay, now, first off, we're going to go into the trend intensity ratings. Okay. So the top 10 trend intensity ratings, and there's only 1 at 10. There's quite a few 9s in here. So Rio sits at the top with 10. It's been a fantastic run for a while. We're going to have a look at this one a bit later on, but it really has been moving ahead very, very well. The last few months has been some pretty significant gains. Sandfire, we know, is the copper. Nickel Industries, which we're going to have a little look at later on. ALQ is doing well. Capstone Copper. Sims is doing well. Another one we're going to have a look at. BHP. Sigma's testing those highs again. And Westgold and Stanmore are also doing as well. So that's our top 10 trend intensity ratings at the moment. You can see Sims Group there testing the current highs at the moment, and so we'll have a look at that one a bit later on. Stock picks were down 11 last week to 35, so we did lose quite a few base metal stocks, copper, gold stocks maybe. There's a few things that we didn't knock out there, locking in mostly profits for the most part, just finding down our stock pick count at the moment. So we had 1 in this week, and we actually had 12 out, so the stock pick count's dropped to 35, which is down around about, I think it's about 22% of stocks that are actually trending at the moment, which is not fantastic. Anyway, that's the way it is. Okay, portfolios, which I promised you a review of this a couple of weeks ago. I'll finally get to it. So let's have a look and see where we're at now. The conservative portfolio, we're always conservative with some parts of it. It has 3 out of 10 stocks, so it's knocked out quite a few. But it's still running at 11%. That steady rate it still runs at. Bit of cash at the moment, and 3 good stock picks in there. The Energizer 5 stock, the one we've been running since 2003, is 5 out of 5 stocks at the moment. 100% equities, running at 19.6 CAGR at the moment. The Energizer 10 has 8 out of 10. We've clipped a few off. As last week, we lost quite a few stocks. We've clipped a few off from some of the portfolios at the moment. The Energizer 10, since inception, 8 out of 10. It's running at about 14.9%, which is still pretty good indeed. Then we've got the Energizer 5 stock, started in August 20. During our difficult period, we have 4 of 5 stock picks in there, and it's running at 19.2%. Then we have the one we started in March 21, which has been going for 5 years. We've got 4 out of 5 stocks in there at the moment. It's running at 25.3%, which has been amazing. So the last few years, as I say, have been very strong in the market. Whether it's the gold or whatever it's just been nicely kicking along our returns very well indeed. So we're doing okay in the portfolios there, and we're happy enough where we're set at the moment. So just clipped off a few there, put a little bit into some cash there. Okay, so that's the portfolio update for now. Overseas markets, let's get straight to those. Okay, the Dow Jones. Again, the Dow Jones seems fine at the moment. It's making new highs. We do have a bit of selling, which has come up here down here. So we're getting a bit of a mixed flavour in this market at the moment and some of these trends. So although the Dow's making a new high, the trend is still up. There are sellers out there, haven't stopped the market yet. But then we go and have a look at the S&P index. Which is also slowed down a little bit there. It's still making new highs roughly, or sitting around those highs, but we can see a bit of a mixed bag of selling in here and buying, so the market's not so sure at the moment. Rate of ascent is slowing clearly, and then again, we take it a leg further, we go to the Nasdaq, which perhaps looks even worse. Not worse, but it's just slowing down quite a bit. We've seen this little range that's been in here for a couple of months now, which it can't seem to make any gains for the moment. But now we've got this huge amount of selling which is appearing. It's stopped the market, hasn't driven it down yet. So we've obviously still got some buyers there, but the selling is out there now. And so we're not going to ignore this for the moment. We've got to watch this pretty carefully, this trading range of the Nasdaq, and especially watching S1 down here to see if we can hold above here. If it breaks down below there, then we get a little bit of a, it's just another little bit of evidence that says this market's maybe going to come off a little bit. Anyway, so we are due for a correction at some stage. We haven't had a big correction for 5 or 6 years, so we're certainly due for it at the moment. So we'll keep an eye on that, and we can also see the momentum has slowed a little bit. Still all positive, mostly. The volume's the one that we're really watching at the moment, and also the sideways movement in price. That's the Nasdaq. Okay, our market, well, bang, back testing those highs pretty quickly. Those banks are amazing, aren't they? What they've done, CBA yesterday, and NAB had a great rise yesterday. So that's, they're always out there, the banks supporting our ASX 200. And despite losing another 12 stocks last week, this market's still on its highs there. So those top 20 stocks is really what this index is. So some of them are doing okay and holding this market pretty well indeed. Gold, commodities, still strong. We had a little bit of a blip a couple of weeks ago and everyone thought maybe it was over, but it's not over. The buyers are back. That little red bar is a bit of a lonely bar and a middle of a whole lot of green bars here at the moment. So the buyers are pretty well insatiable at the moment for gold and silver and things like that. So it still stays positive. There's no real problem there. That was a little blip last week. Copper, again, it's still trending up. If we look at this over the longer term, we've got this big break of this big resistance level there, flat top triangle, which we did get a bit of an odd pattern which happened here, this big sell-off here. But apart from that, the stock has now really continued higher and higher, and it is moving out of this range, which is good. Volume here now, we've got some big selling here, hasn't affected the market yet, but there certainly are some sellers out there, so it is a concern, but we go with the trend for now, which is up, and we've got the copper stocks running pretty well, Samphire, Rio, Capstone, those sorts of things. So copper seems okay at the moment, but it's not full steam ahead, but it's still rising, so I guess that's what we want to see. Then we go to Brent crude, and I believe it might have been up again last night. But what we see at the moment is, if we just look at this, blow this up a little bit for you, we know we've got the double bottom here, and now we've got a good rally here on good volume, which has now hit what we call our switch zone, where we have the moving average, which is through, the downtrend line, which is not through, and the horizontal line, which is not through yet. So work to be done here. R1 really is the level we're looking at, which is around $71, $71 for Brent crude. That's what we really want to see it through. But this certainly is encouraging. It may come back and test the lows. It may pull back to a higher low. We don't know yet, but it hasn't got through yet. So we're still waiting patiently to see if we can get some sort of support for our oil stocks from the crude price. So that's your commodities at the moment. A little bit of a mixed picture again. Okay, so now let's get into some of our good bits, which is the stocks. Okay, Rio Tinto. Well, it's been an amazing stock. It's risen from $100 to about $160. $100 in June last year to $160. So that's a pretty big rise. It had a bit of a downtrend here. We've got some sort of trend reversal down here, which didn't really get us trend intensity confirmation here. So we've had to pull our reversal back to here. Which is where we entered the stock, and you can see here some very, very good volume here, some very, very good momentum. So we're nicely confirmed there. We're happy to buy it here. We've still got 20% since the 1st of December on this one, so we're not unhappy about that, and we're certainly not unhappy about these highs that it's making at the moment. So Rio's looking very interesting. We also now have new all-time high potential for Rio Tinto, trend intensity rating of 10, and this move has really been a powerful move. I mean, strong moves, you think, well, how far can it go? Well, they can go a lot further than we think sometimes. So we've always got to be a bit careful about chopping out too early on these sorts of things, especially when we're making new highs. So Rio's looking pretty good, and this volume, especially over the last 3 or 4 weeks, pushing it through there, has been amazing. So roll on Rio. That's probably got some potential to go higher yet. Okay, Sims Group, another one. We're sort of seeing a bit of a shift in some of these metals into these base metal areas, and it's interesting to see. So scrap metal, this one is Sims Group. It's behaving pretty well, in fact. So we've got this big pattern down the bottom here. It's almost like an inverse head and shoulders, roughly. But what we've got here is a big neckline or resistance level through here, and this is the level we looked at. We had a rally, we had a pullback to a higher low. It's now rallied through this big resistance area here, and all of a sudden we get volume appearing, momentum gathers, and the stock races to R1 pretty quickly, which is a really, really good sign. And through R1, well, who knows? But remember, this stock was once a much higher price stock than this, up around $40 at one stage. So we're at about 21 at the moment. So there's still plenty of potential left in this one. I like the look of this chart. The volume's good. The buying's strong. It's above the average. Trend intensity rating is +9 at the moment. That was as of last week. So after this week, if we finish up here, it looks like we'll go to a rating of 10 again on Sims Group. Who knows? We might get through R1. I don't know yet. But anyway, we'll wait and see. But it looks very positive for me at the moment. So that's the next challenge, R1, which is at $22. Okay, Nickel Industries I mentioned before. An interesting chart. It's got the highs up here at around about $1. So we've had a little, just to go through what I've seen here, we've had the lows here of support here. It's rallied to a high. We've got no new low here, and it rallies through here, which gives us a trend reversal. Good consolidation. We see the volume starts to appear all through here. It's quite strong. I'll just try and squeeze this up a little bit. So you can just see a little bit about what's going on. So very, very strong volume all through this pattern here, which is a really good sign of buyers coming in after this sell-off here. Last gasp sell-off from the sellers there. So we've now rallied straight towards R1 on a good, which has been a really good break up here. We've had a good week this week. Like Sims Group, we've got the challenge ahead of us. We've also got some selling, which has also appeared here. So the sellers have been attracted by this higher price, but this is a good jump from yesterday. So again, selling is there, but if it doesn't stop the price, then that's not a big concern, because it's actually meant the buyers are absorbing it and can push it higher again fairly easily. So the selling is quite good here, and the price is holding up well. So we like this picture very much on Nickel Industries. So through R1 is certainly an exciting one for us if we can get through there. So that's a hold for us at the moment with a trend intensity rating of +9. Interesting chart. Okay, now we've got a New Hope, which I think we've maybe reviewed a couple of times recently, but finally it seems to have moved through this area here we're looking at. We've got a nice downtrend here, a little accumulation pattern, and now we're starting to get a trend reversal, high low, resistance up here. We're starting to break through here now, which means we're moving from the accumulation stage probably into the uptrend stage, and that's what we'd like to see. And when we look at what oil is doing at the moment, there's some potential there. So we can also see the buyers have been whacking into this one since for the last 12 months pretty well, getting into this to New Hope, held the market up pretty well, and now we're starting to push through this resistance level at around about 450, 455, wherever it is. Tendency rating is 0, so it's going to confirm a break here. If we can close above here this week, that certainly will go into the stock picks next week. So this is all pretty impressive. And when I look down here, without reading too much into these little things, it is just starting to move above 0 there. I'd like to see another week or two expansion to get it to really give it to, because they can turn around pretty quickly, these things. But New Hope looks pretty good. We've got a nice downtrend here. We've got a nice little accumulation pattern, which is now breaking out of. Keep it simple. Don't complicate things. We're now moving to the uptrend stage. So if it does break, we just buy with a stop and let the market do its work for us. Okay? So that is New Hope, another interesting one. Plenty of good stuff out there at the moment, despite there not being a lot of stock picks. And as I said before, although there's not a lot of stock picks, there's a lot of stocks that aren't trending, which means there's an awful lot of potential for stocks to break out and get that break that we like to get the break. We like to hit them when they break so we can get that momentum flow from the break, the change in sentiment, whatever it might be, that trigger. Okay, now one stock I haven't looked at for a long time, which is because it's been going down. Coal's had a good run for quite some time, but it's certainly stopped its rally. Woolworths, well, you know, it's had a mighty nasty time for years and years and years. It's tied up around $44. It got down to around about $25, and since then we've seen it rally a bit. And if I just blow this up for you, can have a little bit of a better look at this. Okay, so what have we got? We have here, what I don't have is a trend reversal, which is a bit of a worry at the moment. What I am getting is I'm getting support here. I'm getting it through the average. I'm getting it through the average. I'm getting it through this horizontal resistance level, which was resistance support all the way through here, and that's a good sign. Now we've got this downtrend line here, which is about to be broken. As I don't have a trend reversal level yet, I'm just going to lift my reversal level up to around about here. just for some confirmation and from some safety. But Woolworths is starting to look interesting. The trend intensity rating has moved up from the negative levels into -2, because you know how trend intensity goes. It goes from the higher levels down to through the mid-range, down to the low levels and back up. So it swings with the stock cycle basically for the most part. So this is looking like it's starting to move into the area that we want to see it through. If it can get through $33, that's sort of the area I'm looking at. I'm not making any promises at the moment. I'm going to wait and watch this one, but it's certainly looking a lot better than it was before. And I like this volume, and I like this momentum index starting to kick above 0. So Woolworths might finally be getting something right, and it may start having a bit more of a rally, which would be interesting to see it get back up to those highs eventually. So Woolworths may start to continue to rise for the moment. Interesting stock. Okay, another little stock called Judo Capital, recent sort of listing, but it's been an interesting stock. There's been a lot of support in the market for it, and it's done pretty well. Initially, it started off not so well. Initial listing price was up around just $2.30, something like that. That's where it was listed at. That's where it came on board, and it went all the way down to about 80 cents before the buyer starting getting interested in recovering it. And you see this move up here starts to get a bit of volume in here. Then we hit a bit of selling, and it struggles a bit, and it's come back down again. We haven't made a new low, which is a really good sign. And now it's looking up to move this whole area up between about $2 and 230 is really the area I'd really like to see this through. So this is looking better. We had some good selling here, which pushed the market down again. We didn't see any new lows, which is always a good sign for us, which means the buyers are still holding it. And now we're starting to get this move up. As the buyers start to, we've got a bit of Christmas patterning happening here, but we're starting to get the buyers starting to come back here in the last couple of weeks. There's been some good rallies. We're now seeing momentum starting to move above 0. So the picture is starting to swing, which is what we like to see. And it's the break points that we identify, which is when we try and get that the break when the wave breaks and then the sentiment kicks in, and then we get those big moves, those big momentum moves. So that's what we're seeing. So hopefully we're about to see move into that stage with Judo Capital. Interesting little stock, as I say, just a new one, but always interesting when we have a stock sort of taking a bit of money off some of those big banks. I can't believe how much money that Commonwealth Bank made yesterday for the last quarter or the last half, whatever it was, just billions of dollars, and extraordinary. But anyway, they're still there, and we have those 4 banks, which are our solid base for our stock market. And there's a few nibbling, I think Macquarie's taking a bit of share from the housing market, and there are little stocks like Judo Capital just nipping at those banks at the moment. But this looks like an interesting stock, and it's a bit of fun. So that's Judo Capital for you. The next one I want to have a look at is our old friend AGL. Hello, off it goes after yesterday. Had a nice little rally there. So let's see what we've got here, because we've been watching this one for a while. We haven't been too enthused. By what's been happening of late, because we started to come back, and still last week it was still trend intensity rating of -7 there. So we've still got this downtrend in place there, this horizontal line, which has now both been broken and the moving average, which is an interesting situation, but trend intensity rating is still -7. So we're probably not likely to get a confirmation. Even if it does close above this level, we're probably not likely to get a confirmation of this moving into positive territory just yet. We might have to wait a little bit. So we'll just have to see when stock picks come out next week and see where we're at with that, see where the rating is. But it's certainly looking a lot better, and it's really nice to see stock go up on good volume, because AGL has struggled for a while. But if we look at the big picture here, we remember this came from a low point. The Cannon books got involved in this, and then it all of a sudden went like a green stock all of a sudden, and we saw a bit of a change, a little bit of disappointment here. But since it's then rallied through this trading range, and it's above the lows, which is a good sign. And I would think now we're probably looking for the potential for this to move back to R1, but we'll just see if we get confirmation, if we actually get a proper signal for AGL. This trend intensity rating has got to improve a little bit more for us, which it hasn't. It'll certainly get back up to the neutral levels. Whether it gives us confirmation of a buy, I don't know as yet. But certainly an interesting one, and we're watching this one closely, very closely now, again. Okay, 2 more stocks for you. Well, one is CSL, which, we're all sort of surprised, I guess, as what's happened, the sort of the demise of CSL. But when we look at this stock here, and this has been a developing picture for quite some time, really. So here we have a 5-year trading range here since 2020 right through to 2025, just rotating, and I don't think we've been involved in this stock for a long time. Okay, and then forget CSL, this could be any name at all, don't worry about the name, but when we see this sort of thing happen, a breakout of a big trading range like that, this isn't going to stop, or it's highly unlikely to stop. Probabilities are it's going to go lower. Usually it will go the range, 320 to 240, you can extrapolate that range down and you'll get somewhere around where we are at the moment. And we saw a little bit of support trying to appear in there last week, but it got knocked on the head. The resignation and the report didn't really do any favours for CSL, so people are a bit worried about it. And again, it doesn't have any yield, so why hold a stock like that unless it's going up? So the selling's dominant here. The momentum's weak, but it's flattening off, which is okay. But this looks like down again. So really CSL is just a no-no. Don't catch a falling knife. You just wait for it to turn and jump up. So value buyers might be interested, but certainly not me. It's in a downtrend and it is falling. So, and trend intensity rating is -9. So it cannot be a buy in my book at all. So that's the CSL. I thought you might like to get my opinion on it as to what's happening at the moment, but certainly a no-no. Other opportunities are far better for CSL. Okay, now we're going to the smaller end, and this is a little stock that's actually been doing quite well for some time. If I just blow this up a little bit, you can just see Horizon Oil. It had a range here for a while, 16 cents, came back down to about 4 cents, and then it's had a little trend reversal here. It then rallied through here. It's now broken above the highs, and we've now got a really sort of steady trend that's just pushed this higher. The highs have been nice, which has been good, and this is just a situation where this just goes up, down, high highs, high lows, high highs, high lows, and so the trend is your friend, follow until told otherwise. So really, since this new high has been made, this has really been going up the whole time and holding pretty well. Volume's been okay. Momentum's just been hovering above this zero level the whole way, which means there's a really nice steady trend, uptrend in Horizon Oil. And interestingly enough, if the crude price starts to move again, this might get a little bit more of an impetus again. But I just find this an interesting stock, how it's behaving and what it's done. Demand is very good for this stock. It goes up, it comes down, it goes up, it comes down. But the high lows, high highs is what we're seeing at the moment. So the trend intensity rating for Horizon Oil at the moment would be a 10. And I think yesterday it closed at 22.5, which is another new high for it. So just an interesting little stock for you, one to have a little play with if you want to do that. Okay, so that's the stocks I've got for you today. I hope there's plenty of interest in some of those stocks there. Some are going well, some look like they've got more to go yet. So there's something for you to watch. Okay, so now what I want to get into is the trading tactics. And this is a fairly simple one. I talk about the start about catching a trend, getting the break. That's what we want to try and do, is get that break of trend. Because that's really when you get the kick, really when you get the momentum. And there are only two things that we use to do that, and that is not an endless supply. There are many other things that many other people do. I just do these two things. I have total control over what I do, and that's just my little world that I live in, okay? So, firstly, catching the trends on the break. So the two things that I use, one is a new high. So I observe, identify, I build my case, I implement, I execute, and then I follow until told otherwise. And Eureka is a perfect example of this. It has simply had a break of a new high here. We see some volume come in here. Above the average, it would get a trend intensity rating of probably 8 to 10 here, and it has not looked back since. It's about $18, and this is up around $26 at the moment. So it's moving ahead pretty well. It's just a simple new high. All we've done is buy a new high here and raise our stop, and we're still doing that, and we don't know where it's going to go to. So again, just going through those processes of watching what's happening, identifying the patterns you're looking for, building your case, your volume, your moving average, things like that, then implementing your trading, executing it, and then first following it until told otherwise with your stop. When your stop goes off, you get out. Simple thing. Same thing with the trend reversal. Just looking at South 32 here. It had a nice little downtrend accumulation, now moving into the uptrend stage. So this is a very, very good little switch zone here. Downtrend line, horizontal and moving average, all there. Trend reversal, and we get beautiful volume and moving average. So this really is a case, you just buy with a stop and you follow it. Okay, so they're just really the simple steps you take to make a trade, and you don't add in other things that are going to cause you to have a doubt. There's all sorts of things you can add in there that you may want to, but that's called data mining. That's called making your own picture, which you don't do. You look at the market in a neutral way. You can have a bias either way. You've got to try not to. That's why I use these tools, because it takes away my thoughts and my emotions. Sometimes I don't like a stock, but this says buy, so I have to buy. And that's the situation it's got to be in. So you've got to be mind neutral in this and listen to what the market is telling you, because it's always sending us messages. Okay, so very, very simple way of catching the trends as they break. Very important. Okay, disclaimer. That's a very nice disclaimer. And then you go there, well, now you know how to do it. So there you go, off you go, and you can do it. So anybody who wants to come on board and subscribe and see what I do in the Trading Centre, which is my main trading page with all my entries, exits, stops, trend intensity ratings, things like that in there. So you can come on board and have a look at that if you want. Okay, so that's about all I've got for you today. Once you have defined your entry setups, in my case it's a new high and new reversal, simple observation and collation of basic evidence will build your case to a crescendo or not. So it may be an or not in the case of nickel industries. It may not get through. It may not with Judo Capital. It may not, Sims Metal may not make a new high through 01. So we've always got to be mindful of the other side of what we're thinking, because we're happy that we're long in these stocks and we want them to go on forever, but they're not going to. So we've got to be very aware of what's happening. So you've got to build your case to a crescendo or not. Don't try and be everything to everybody. You can't do that. Too much information is just going to confuse you and make big rooms for error all the time. You simply can't do it and be. Some people try and cover too many stocks. You don't have to cover a lot of stocks, to make this thing work. So because there are always opportunities, as I said before at the start, and some trends end, others start, and the endless rotation of stock trends. And we're probably seeing a little bit of that happening right at the moment. Okay, so the main thing is to focus on your own tools and evidence. It's all you need. Okay, so I use my 4 tools: my volume, price, momentum, and moving average, and that gives me what I need. And I build my trend intensity indicator out of things like that. So I've built my little environment for what I do. And you can follow what I do, or you can take what I do and adapt it. But just make sure you keep it simple, follow your rules, be patient, have discipline, all those things that are really important, all those things that are common to all traders. And that's all successful traders, I should say, and that's the way it is. So focus on your own tools and evidence. It's all you need. Okay, so that's all I've got for you today. Hopefully you've had an interesting day today. Watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all again next week. Thank you.